Hello, and my name's Andrew Wellstead, and I'm just doing a brief video on the capital gains concessions and how they affect you as an individual and a business owner. So, what do we want to know? So, the concessions, why are they there? What are they for? And when do we use them? So, they're there to, in a way, really briefly, reduce your tax burden. So, when you sell an asset, there's different concessions that will reduce your tax burden that you use at a certain time. Okay, now there is also, if you get a capital loss, you apply that to the following years when you get a capital gain. You can only apply your capital loss in following years when you do have a capital gain. If you have no capital gain, then you won't be able to use that. It will just keep rolling over. So, what are the concessions? Okay, the main one that everyone knows is the general 50% discount. That's for individuals, trusts and some super funds. You have to have the asset over 12 months and the gain is reduced by 50%. So, say you bought it for 50,000, sold it for 100,000, the gain is 50,000. Yes, that was reduced by 50% to 25,000. Companies are a little bit less, so they're falling into the category of 1/3 of the gain. Now, the small business concessions, the 15-year exemption, the asset has to be held for 15 years or more, and the owner of that business has to be over 55 years of age, retiring or incapacitated. The main use for this is for retirement or getting ready for retirement. So they're starting to sell up their assets now while they're still active and using some of them benefits. Number 2 is the 50% active asset reduction. No, this is not meaning that you run on a treadmill. Okay, this means that you can reduce your active assets. So selling a hoist in a mechanic workshop because it's being used all the time, that's an active asset. The number 3, retirement exemption. Now, so the owner has to be over 55 years old. If they are not over 55, the proceeds must go into a superannuation fund. Now, there is a limit of $500,000. So you can only use this exemption once. So once you've used it, then you can't use it again. Simple as that. The rollover relief is like reinvesting your capital into another active asset, like upgrading in a way. So this is where the concessions mold into helping small businesses and other businesses and trusts invest and grow within their own business. The number 3 is pretty simple, main resident exemption. So when people are selling their primary residence, there is a criteria to be met. If it's part work, part home, then say it's 30% work, 70% home, it's 70-30. So 70% main residence, 30% work. You'll be only able to claim the 70%. Temporary absent rule is for use for people that a move out of their primary residence and say they rent it out. Can be maxed for 6 years, but you cannot buy another primary residence property in that time to be claiming this. And number 5 is in relation to all the payments that you receive from capital gains concessions. We're exempt from tax, but small business shares the entity involved. Now, summed all up, the capital gains concessions give large relief for a variety of business structures to help them grow, improve, buy new things, capital invest. There is eligibility around all these concessions, so you must speak to professional advice like your accountant before even selling your assets. So they can say, well, you know, it's not, you haven't had it for 15 years yet, you'll have to wait, or you sell it now, vice versa. So there is always impacts and outcomes on these concessions. So my main thing is, before you do anything, I would suggest to speak to your accountant. Thank you for listening, and I hope this was helpful.